Hi there, welcome to Kneppyinvests. Airtasker, that's online marketplace for tasks or chores to be done around the house, listed on the ASX back in March 2021. I actually did do a video on this company after they released their June quarter results in July or maybe even August of last year, because the company was operational cash flow positive. And I thought, because they were operational cash flow positive, I'll just do a video on the company, even though I'm not that interested at all in taking a position in this company. And there are a few reasons behind that. But just because I'm not interested doesn't mean you don't have to be interested. And the whole point of me doing these videos is just to share ideas with you. And if you do like an idea, then you can run with it. Anyway, as the company went into the start of financial year 22, it seems like the management decided to spend a lot of money on advertising and marketing. So the company became highly operating cash flow negative the first few quarters of this financial year. So even though I am sharing ideas, because they were highly operational cash flow negative, I decided just to put this company way at the back of the to-do list. But they have really pulled back their spending on advertising and marketing. So the company has become again operating cash flow positive in the most recent quarter, the March quarter of financial year 22. Hence, I've decided to do this video just to see how Airtasker has been performing over the last few quarters, I mean. Airtasker is a task or a chore outsourcing online marketplace. And if you don't know how this works, just imagine you have some chores or tasks that need to be done around the house. You need someone to walk the dog. You need someone to fix the busted toilet. So you need a plumber, or you need someone who loves spiders because there's a massive huntsman who just won't budge on the side of your wall, and you're deadly afraid of spiders. So what you do is you go to Airtasker, find someone who can do those chores, those tasks for you, like a plumber. They'll come around and do the job, and everyone is happy. Now, there is one flaw with this business model that I can think of, and it is a major flaw in my opinion, and one of the reasons why more than likely I'll never invest in this type of company. So just imagine the plumber does come around, they fix the toilet, and you like their job. They do an absolutely fantastic job at fixing the toilet. So instead of just leaving after they get paid, what they're going to do is leave you their business card, and next time you need a toilet fixed or any other plumbing done in the house, plumbing repairs, instead of going through to Airtasker to find the expert, you already found the expert. They have given you their business card. So you go directly to the expert instead of going through Airtasker. So I think there is that flaw with this business model, and maybe there are ways around it. Maybe Airtasker have found ways to get around this slight flaw. I don't know. Haven't done too much research into this company. And one of the reasons I haven't done too much research is simply because of that one flaw, which I think is a significant flaw. Anyway, Airtasker was founded in 2011, listed on the ASX 10 years later in March 2021. There is a fair bit of skin in the game. Tin Fung has 12% stake, and Peter Hammond has a 16% holding in the company, and Skyfield Capital has 6%. So there are some fund managers interested in this company. Now, the market cap of this company, last time I did the video, the share price was exactly $1. Now the share price has dropped all the way to 39 cents, and the market cap is 162 million. Now, Airtasker might have been caught up in all this tech selling we've seen over the past 9 months, or maybe the market just is aligned with the way I'm thinking, that there is a significant flaw with the Airtasker business model. And the ticker code for Airtasker is ART, or Garfunkel, as I like to call it. Now let's have a look at the financials of Airtasker. This is the trailing 12 months. So this is really looking at the last half year of financial year 21 and the first half year of financial year 22. And really want to focus on the last two numbers here, operating cash flow and NPAT, highly negative, both of these. And I've already mentioned they did spend a lot of money on advertising and marketing the first half of this financial year. That's why they were operating cash flow negative by 7.5 million. And they were also loss-making by $13 million. So two really ugly numbers there. And that could be another reason why the share price of this company has really pulled back over the past 9 months. Now, before we have a look at their most recent Appendix 4C for the March quarter in financial year 22, just want to go back 1 year ago and actually have a look at the very first Appendix 4C that the company did release to the market. And based off this Appendix 4C, things were looking pretty good for Airtasker. The company was operating cash flow positive by $484,000 in this particular quarter. And for the first 9 months of financial year 21, the company was operating cash flow positive by $4.7 million. Not only that, because they went through the whole IPO process, raised some money through that, the cash on hand grew by $15 million and finished the quarter at almost $13 million. So things were looking good for Airtasker after the first quarter that they had listed on the ASX. Now let's have a look at the most recent March quarter results for Airtasker. And things seem to be moving in the right direction if we compare March quarter from this year to the March quarter of last year. Cash receipts up 1.5 million, and the company is more operating cash flow positive this particular quarter than last March quarter. They are now operating cash flow positive by over $1 million. But it's also quite prudent to look at the year-to-date numbers here. So that's the first 9 months of this financial year. So receipts of customers, 25.4 million, not really drawing anything from that, but receipts are growing, it seems like, compared to the first 6 months of this financial year. But something that's really stands out here is advertising and marketing. For the first 9 months of this particular financial year, they spent $8.2 million on advertising and marketing, and only $1 million in the past 3 months, or for the March quarter. That meant they spent $7.2 million on advertising and marketing the first 2 quarters, or about $3.6 million per quarter. They've also pulled back their spending on staff costs and administration costs this particular quarter compared to the first 2 quarters. So because they have pulled back the spending or slowed down the increase in spending, and their receipts of customers have grown, that meant the company is now operating cash flow positive instead of being highly operating cash flow negative the first 2 quarters of this year. In fact, they would have been operating cash flow negative by almost $9 million the first 2 quarters. So cash receipts up $1.5 million, administration and marketing costs up $600,000 from March quarter last year, staff costs up $1.2 million from the March quarter last year, product manufacturing operating costs down $150,000, administration costs down $600,000. They do spend a little bit of money on intellectual property, $1.9 million. But overall, cash on hand actually did drop by $1.2 million in this particular quarter. And the reason it did drop, even though they were operating cash flow positive by $1 million, was because of the spending in intellectual property, which is an ongoing cost. But they'd still have a lot of cash on hand, $32.8 million. So a lot of cash, and that amount of cash gives management the flexibility to grow this company in the future. So it's going to be very important moving forward what they do with the cash on hand. Are they going to spend it on an acquisition? Are they going to spend it on increasing advertising and marketing to try to get more customers, maybe trying to expand overseas in other countries? Those sort of things are what management might do. So the other thing they could do with cash on hand is dividends, share buybacks. More than likely, they won't do that because that would be a bad allocation of the capital they have at hand for this type of company. They want to grow. So what's the best way to grow? Well, maybe acquisitions, maybe expanding overseas. So that's why management get paid the big bucks to make those sort of decisions. Typically, I like at least 8 quarters of history, receipts history, before I really determine whether there is any trend in receipts. For Airtasker, we only have 5 quarters of the history because they listed on the ASX in the March quarter of 2021. Now, if you look at the first 3 quarters here, receipts actually were going down. They went down from 8.3 million to 6.5 million. But if you just look at the last 3 quarters, receipts are climbing, increasing from 6.5 to 9.7. So even though the last 3 quarters, we have seen receipts grow, if you take all 5 quarters as a whole, there's no discernible trend like right now. I want to see what's been happening over the last 3 quarters to continue over the next 3. And if it does, I think we can see a definite trend in receipts for Airtasker. Now let's have a look at the daily chart for Airtasker, going back to when they listed on the ASX back in March 2021. And to be honest with you, there was a massive amount of hype about this IPO. There was a lot of interest about Airtasker when they listed on the ASX. And you can see that interest just by looking at the chart, by looking at the volatility in the share price, particularly the first 3 trading days, the volume, a massive amount of volume. In fact, on the second day, there were over 100 million shares traded. On the first trading day, the share price at one point fell to about 90 cents and rose to about $1.20. On the next trading day, the second day this company's shares were traded, the share price went from about $1.12 all the way to a high of nearly $2. And then on the third day of trading, the share price went to a high of almost $2 again, but then fell all the way back to about $1.35. So a lot of volatility the first 3 trading days, a lot of volume, and that just shows you there was a lot of interest in this company. Unfortunately, that interest has really died away since then, and you can see the lack of interest just with the share price dropping at a consistent rate. In fact, the share price has dropped from the high of almost $2 to a current share price of 39 cents. Now, the more this falls, I suppose the more attractive this company will become to some investors out there, particularly if the company can remain operating cash flow positive over the next few quarters. But lots of negative sentiment in this company right now. Share price is in a well-defined downtrend. If it was up to me and I wanted to take a position in this company, I would just wait for this negative sentiment to turn around. And it could take a while to turn around. The other scenario is we could see a V-shaped recovery in companies like Airtasker, and there could be that sudden shift in sentiment. I think that's less likely. More than likely, what we'll see is the share price go into consolidation period, and then eventually the market will want to see some confirmation that this company will become profitable, will become operating cash flow positive, will become free cash flow positive. And when the market sees that, that could be when there is a shift in sentiment around this company. That's all I have for this video on Airtasker, looking at the March quarter, Appendix 4C for financial year 22. If you have any questions about this company, maybe you think I'm completely wrong. Maybe you think this company is the future of how we find tradespeople. There's another company called High Pages. There could be a few more out there as well. So maybe you think this is the future and this is a great bargain at current prices. I'd love to hear your opinion because I love to hear counterpoints. That's how we grow as investors, to listen to and try to understand the opposite point of view. So leave a comment in the comment section of this video, and I really would appreciate it. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.